What's up, guys? Welcome back to Roensch Capital Charts. Today we're taking a look at Tesla stock, ticker symbol TSLA, on a variety of time frames in anticipation of the next trading day, Friday, February 23rd. Well, guys, Tesla stock here today up $2.64 a share, 1.36%. Quite the volatile day here for Tesla, though that's not really unlike many other days here. Let's take a look here, starting on the 1 minute chart. First of all, guys, I'm covering Tesla stock every single day from here on out. So if you like Tesla, let me know in the comment section down below that you'd like me to continue doing so. And second of all, if you get value out of these videos, please subscribe to the channel. I greatly appreciate it. So taking a look here at the name intraday, just starting really briefly on the 1 minute chart, you can see here that there was actually some opportunity to scalp upside on these little pull-ins off of the various EMAs. For example, I probably would have been looking at the 50 or the 20 EMA in this particular case. However, in doing so, the volume profile is highly important. Ideally, you want much bigger volume on the pull-aways and then very low volume on the pull-ins if you're looking to get long, which in this case, of course, you would be. Understand, though, that this style of setup has substantially more edge, meaning positive expected value over a big enough sample size, in stocks that are in play, meaning elevated relative volume, 3 times, 5 times what is normal, a fresh news catalyst, things like that. Okay, scalping this style on blue chips, while you might be able to just eke out a little bit of edge, for me, I'm not after a little bit of edge. I want as much edge as I can get. So if I'm going to scalp this style, it's going to be on stocks that are in play. If you guys want to get my scalp setup alerts, my personal scalp setup alerts, swing trade setup alerts, unusual options activity, or maybe even some platinum one-on-one coaching, take a look at that first link in the pinned comment. But let's move on here to the 5 minute chart. Okay, looking at the 5 minute, you guys know what I'm looking at. I'm looking at the volume profile, right? I want to see, is there any volume changes that correlate, very obviously so, with big changes in stock price? You can see here, what were the biggest moves today? Well, you had this volatility off the open. Okay, we can look at that. And honestly, I'm not really getting anything out of this because we know, contextually speaking, we're going to get a big first candle in terms of volume. And then the rest of it is actually relatively even. It's not really one-sided. Volume actually during this bigger move upside, intraday here, looking at this, I would have expected this to actually be a little bit lower. We were averaging, between maybe 750,000 shares per 5 minute bar during that time frame. It would not have surprised me to see that a little bit lower compared to the open and close, but it actually held up relatively well during that upside move midday, which is not terrible to see. Let's move on now to the 30 minute chart and get contextual about things to look at heading into tomorrow, Friday. So looking here, it becomes very clear what's in play here. We're looking at the 50 period and also the 200 period. We bounced relatively hard off that 200 period on the 30 minute here today and reclaimed that 50 after giving it up. So tomorrow, upon a downside test of either of these, of course, the 50 period, I'd want to see that hold. If we fail to hold the 50 period, bulls, we're going to want to see the 200 period, that gray line, hold as kind of a secondary, like a backstop. Bears, your primary goal tomorrow, when looking at the 30 minute in particular, is going to be to fade both of those. Give them both up, break downside. Okay, the 4 hour chart. You can see here that we're currently in between both of the very popular self-fulfilling prophecy moving averages. The one that's immediately the most relevant, though, at least on the 4 hour, is going to be the 50. Again, very similar. Any downside tests of the 50, like we saw today and yesterday and the trading day prior to that, right? I want to see a hold. Okay, but ideally, looking at the 4 hour bulls, we don't really want to see a test. Ideally, we just pull away and head up toward $200 a share. Bears, you're going to want to see a downside break of that, heading down toward 190. All right, now, the most important chart of all, which is typically going to be the daily, almost always on any security that you're looking at. This makes things very clear, okay? When it's very obvious, don't break it. Don't overcomplicate it. You can see that the 200-day moving average and the 50-day moving average, those gray and white lines, respectively, those really are not immediate concerns. They're really not immediately in play. Though long-term, I'd like to reclaim both of them from a bullish perspective, of course. Here in the near term, what is this chart screaming at us? Well, we have that 177.50 to 180 channel to the downside. Again, not really immediately relevant. What is? $200 a share. We tried to reclaim that and failed in doing so. We've been getting rejected off of it ever since. If I'm a bull, my immediate priority is to reclaim $200 a share, backtest it, and hold it as support and start to pull away upside toward 210 and the 50-day moving average here on the daily chart. If I'm a bear, still, 200 is the enemy. Any test of 200 you want to see hard fades off of, and ideally, bears, you want to see a downside break getting away from 200 and a downside break of 190 a share, getting back into the 180s for a downside test of that 177.50 to 180 region of potential support. Now, implied volatility here on this name, just so we can get an idea, comparing it to the last 2 to 3 months here, you can see that we are basically in the middle of that range. Just understand that the lower that goes, the more favorable most options buyers are going to see conditions to purchase contracts. And the higher that goes, the more favorable options sellers are going to see those conditions on average when it comes to selling to open positions. And even selling to close if they've been right directionally. Okay, but the higher that goes as well, the higher the potential of IV crush upon a return to equilibrium, upon a fall in implied volatility. And the lower implied volatility goes if you already own the contracts, the more IV value, the more Vega value is getting squeezed out of your contracts, and that's not good because it makes the price go down, all else held equal. Okay, really, really important to understand implied volatility and Vega and their effects on options. Really, Vega is just the Greek that impacts your options based on implied volatility. Not all that complicated, incredibly helpful though. Let's now take a look at the bias that we saw in the options chain here today on Tesla. 1.96 million total contracts traded here today, 1.25 approximately million calls, 712,000 puts. So we are seeing some call heavy trading today, a bullish bias on the overall call put ratio. The shorter term speculators, the 0 to 20 delta range, 431,000 calls in that region and only 273,000 puts. So not only are we seeing an overall call bias, but in the short term as well, those out of the money, cheapy, gambly style short term bets with on average a shorter expiration, we're also seeing call heavy trading in that range. Okay. We go down, take a look at this. Every other delta range on Tesla here today, out of the money, at the money, and in the money, on average, it's going to be shorter term sentiment, mid-term sentiment, and longer term sentiment. Some more extreme than others, but all of them are leaning to the call side with a call bias, leading to an overall call put ratio that's pretty call heavy on Tesla here just from today. Listen, again, guys, I'm covering Tesla stock every single day in preparation of the next trading day every single day. So if you guys appreciate that and you want to get more of these videos, please subscribe to the channel. I greatly appreciate that, and I'll see you in the next one.